Hello and welcome to Africa Business Weekly, where we bring you some of the most impactful business stories across sub-Saharan Africa. I'm Akin Obakeye. Now, it's been a very busy week for business news on the continent, and we'll start the show from the southern region, where Tanya Abimana is standing by to give us a run-through of the key stories this week from South Africa.
Thanks, Akin. And in South Africa this week, we had a conversation with Pfizer's new cluster head for the sub-Saharan Africa region, Kevin Francis, who spoke to CNBC Africa's Fifi Peters to discuss opportunities to build a resilient vaccine pipeline on the continent.
At the World Economic Forum in Davos, our global CEO, Dr. Albert Bourla, launched an Accord for a Healthier World. And basically, it's a first of its kind initiative. It's a game changer, where we have identified 45 low-income countries where there's a huge health equity gap. And that equates to about 1.2 billion people in 45 countries.
Right.
And importantly, 33 of those 45 countries are based on the African continent. Now, an Accord for a Healthier World is basically an initiative where we will make, Pfizer will make all our patented vaccines and medicines that are currently available in America and the US on a not-for-profit basis to these 45 countries. And that is both for current and for future vaccines and medicines. And it doesn't actually stop there. We've partnered with the Bill Gates Foundation, the United Nations Economic Commission for Africa, to ensure that these partnerships take it beyond just the supply of medicines and vaccines. And we've looked at distribution, storage, education of healthcare professionals, and supply chain initiatives, where we can actually ensure that during that very specific last mile, we get our innovative vaccines and medicines to the people that need it most. So it's all about accessibility.
Yeah, what's that likely to mean for jobs?
For job creation, if I can use one example specifically for South Africa, without an additional investment with vaccines, we basically forecasted that by 2040, we could see 12,500 additional jobs compared to the current 3,000. But in addition to that, the spillover is that we can actually create an additional 33,000 jobs indirectly by other vaccine suppliers to the vaccine industry itself.
All right. Circling back to the pandemic, though, the COVID-19 vaccine. So there was a whole lot of hesitancy on the continent to take the vaccine for some people. And also there was because it took so long for the vaccines to get to the continent. I mean, the global stage was terming it vaccine apartheid, in which there was inequalities in terms of distribution. We built up a natural immunity, as it were, to the pandemic. So how is the COVID-19 vaccine and the administration of the COVID-19 vaccine right now going? Are you still making them with BioVac?
Absolutely. We currently, as you might have heard, we've recently announced the preparation for registration, early use authorization for vaccines for the new variant, specifically the Omicron, BA1, BA4, and BA5. And what we're basically doing is providing the biotechnology transfer for these new improved vaccines as such that focus on the new variants. So where we are from a COVID perspective, we don't really know. There could be another wave in the near future. We've seen that happen. Particularly every 3 months, we see the bump in the curve. And if you had to look at specific countries at the moment, like Australia, New Zealand, and Japan, that have had a 6-month head start in their vaccine program, we're starting to see an elevation in the number of cases, deaths, and hospitalizations. So yes, we've got to be prepared. We will continue to manufacture vaccines to ensure that we have the vaccine security and that we're prepared for any other pandemic issues, so that Africa itself, specifically South Africa, has pandemic preparedness.
We also spoke to South African-based impact investment fund Inyosi Empowerment about the work they are doing to fund Black-owned small businesses and the tools that this sector needs to grow. I spoke to Evan Jones, portfolio manager at Inyosi Empowerment, for more. Let's listen in.
In South Africa, there is this dichotomy that you've got a situation where, we have like globally as well, one of the biggest drivers of growth and also of job creation happens in the smaller sector of the economy. Small companies are typically those ones that grow the quickest, and they can create the biggest job opportunities. And so globally, there's actually a huge drive. Almost all economies, whether they developed or developing economies, look to try and stimulate growth in what we would call, EMEs or emerging companies or small companies. And so in South Africa, obviously, there's also a focus on trying to drive that from a BEE point of view, but that's not uncommon throughout the world. So throughout the world, there's this focus. In South Africa, where we have another layer on it from a BEE perspective. So what we've been in the enterprise and supply development space since 2012. So we've got a nice 10-year plus track record. And really what we look to try and do and where we focus is on businesses with a 3 to 5 year track record. So we're not that good at identifying startups, but I think where our strength comes in is if we can look at a business and understand the business drivers and understand how that business can grow and try and figure out whether that business needs capital, we've got funding available which we can put into that business. And honestly, if we do the analysis correctly and we figure out that is the issue that's impeding their growth, often it's like pouring petrol onto a felt fire. It literally, you can see that business really take off with the funding that we provide.
So then what is the most pressing need that you find when it comes to these businesses? What do they need the capital for? Is it growth capital? Is it to hire people? Is it for marketing, websites? I mean, equipment, what are they looking for?
Yeah, I don't think there's, so we provide funding into all sectors of the economy. And so it's difficult to pinpoint any particular need. Obviously, from our perspective, we've funded a lot of our preferred space is to fund growth capital. So we funded a lot of companies where, let's say you've got a company that's successfully manufacturing something and they want to take that to the next level. They need some new property, plant or equipment. We can come in and fund that. A number of our borrowers, we funded a building. So maybe their rental cost was one of their highest costs, and we've come in and been able to provide them with building funding. We have provided working capital funding. It's often a little bit more difficult because typically that goes into, like you say, a marketing cost, which is sometimes a bit more difficult to fund, but we've provided across the board. So I would say if I had to pinpoint our strength, it's probably in the growth capital funding. What we don't do is, and there are other players that do this, we don't provide funding for acquisition. So if someone wants to, if a black-owned business wants to buy shares into an existing white-owned business, we don't provide funding for that. That's not a focus area of our fund. So I would say growth capital is probably the best composite description for our funding.
Thanks, Daniel. Now let's move to East Africa and find out some stories that shaped headlines this week. Over to Julius.
Good to be on the show, Akin. Currently, Africa imports $50 billion worth of food that can be locally produced. In 2008, when there was a food crisis, the number was $15 billion. And it is estimated that by 2030, the number will be $110 billion. The pandemic and a war in Ukraine have exacerbated this situation. Earlier this week, we spoke to Amandla Oko-Ombaka, an associate partner at McKinsey, for more on this topic.
This specific Russian invasion of Ukraine has affected us in 3 key ways. The first is on inputs, because we actually import specific ingredients that are required for fertilizer from Russia and Ukraine. That has actually helped increase fertilizer prices. We already use much less fertilizer in Africa than elsewhere in the world, 2 to 3x compared to even places like India. So that's the first thing, we're seeing rising fertilizer prices. That has a secondary impact on the actual volume or supply of crops that we can get out of the ground. Not just the wheat that we import, about 40% of Africa's importation of wheat comes from Russia and Ukraine. But the fertilizer that we were putting on the wheat we grow locally, or the maize or the rice, whatever we grow locally, that is also impacted by the Russian invasion of Ukraine. And as you know, having less production, more expensive production, leads to the third impact, which is rising prices. The data changes a lot, this is a live situation, but what we can expect to see, we saw this last year, an increase in fertilizer prices that we had last year led to 30% increase in food prices. So the crisis is impacting us in those three ways: higher fertilizer costs, lower production and output, and higher food prices.
Right. And in terms of fertilizers, how comes, what sense does it make, for Africa to still import fertilizers at this rate? Let's start with those simple questions.
It's not a simple question, I wish we were doing more local production of fertilizer. Now, I think we're in a universe where we have to be thinking about fertilizer that is good for the soils that we have, because there's a lot of issues with fertilizer production, about it not being sustainable, about it having a lot of carbon in it. But take away all those, the simple fact is places like India use 2 to 3 times more fertilizer than we do in Africa. Fertilizer can really help improve outputs if you use the right kind of fertilizer in the right way. We don't produce a lot of the things that we consume in Africa. It's not just in fertilizer, it's not just in agriculture. Part of it is the raw materials. We actually have a lot of them for fertilizer. There's a manufacturing that we need to actually do the blending of fertilizers. And then what it takes to get fertilizer to market. A lot of fertilizer is sold in 50 kg bags, 90 kg bags. The smallholder farmer that and when you think about your village, is not buying fertilizer in those quantities. And so the reason why we don't produce a lot of the fertilizer that we consume is because of all of those issues in the supply chain I've just talked about.
And then you've had countries, countries like Rwanda, sometimes Ghana. These are countries that have been able to subsidize fertilizers. Is that something that countries can emulate in terms of increasing the uptake or the usage of fertilizers? And two, what do you think is currently needed to make sure that you attract investors into investing in production of fertilizer?
Yeah. So I would say, one, there's no big agriculture economy you can think of in the world that the government does not subsidize some part of the agriculture ecosystem. So it's not unique in the fact that you're talking about these countries where we do fertilizer subsidies. I think we have a lot to learn from where these subsidies have been well applied. There are a lot of countries, including Zambia, including Kenya now, that are using what we're calling e-subsidies, where farmers are getting a voucher that will unlock a certain amount that they can spend on fertilizer or other inputs that they would require. Because believe you me, people have been farming for centuries, and there's always ways to make farming better, but empowering farmers to decide, is it the fertilizer that they want or need? Is it seed that they need, depending on what part of the country they are, what they're growing? There's a lot we can learn from those systems. There's a lot we can learn about the right fertilizer for soils. It's not just a question of, are you giving people fertilizer, but are yields actually improving? And what we've observed in many countries, including my own Kenya, fertilizer usage has gone up. Yields have not gone up because we're using the wrong fertilizers and our soils are very acidic. But to answer your question very directly, yes, we can learn about how to make sure that farmers are getting the inputs that they need, that they're shared in the most efficient way possible, and that we're actually tracking that fertilizers are improving yields.
Kenya-based retail startup Wasoko announced plans to deploy investment of worth $10 million into Zanzibar's newest initiative, Silicon Zanzibar, which seeks to turn the country into a technology hub. Zanzibar will be offering a list of incentives to attract technology companies to establish base in the country. This week, Daniel Yu, the CEO at Wasoko, spoke to us for what this means.
A founding partner is really about setting the agenda in partnership with the government in order to develop the right policies, the right frameworks in order to really make Zanzibar a top tech ecosystem across the continent.
And what is going to be your role in this case?
So for us as Wasoko, as well as myself personally, I've been very honored to work directly with the Minister of Investment and Economic Development, Mheshimiwa Mudrik Soraga. And as a result of those interactions so far, in fact, Silicon Zanzibar was born. And so I have very high hopes, and I'm very excited for what the next steps forward look like as a result of this partnership.
So you announced around $10 million to be invested in Zanzibar. Give us a timeline of how you're planning to invest in Zanzibar and what sort of invest plans do you have?
The investments that we're planning are really going into building out our operations here as a global technology office for Wasoko moving forward. And so really this is going to be invested into talent, into attracting and bringing in the best technology talent from across Africa and beyond as we continue to scale up our operations across the 6 African countries where we're currently operating, as well as investing into new innovations, testing out new services to expand on Wasoko's current e-commerce offerings.
Right. And then Daniel, you're a retail startup, but when you look at specifically how you have evolved over the years, you have evolved from being an asset-light company to becoming really a full-scale asset-heavy business, really with properties and facilities that you rent out, but you also own. Is this the same model that you're trying to invest in Zanzibar?
Exactly. I think we are looking to both establish operations here to really be a pioneering market for us where we can innovate and experiment with the newest services and product ideas that we have. But really, Zanzibar is about being the global heart of our innovation and our technology development, and really being the place where we are developing the future of the company.
I mean, when we spoke in March, you had just raised around, $250 million seed investment in the Series B equity round from Tiger Global and Avenir. By that time, we were talking about the company that is around $625 million valuation. How far are you from becoming a unicorn?
It's always hard to say when you're in these in-between phases as we continue to grow the company, as well as improve on all of our core metrics. I will say that with the $125 million investment that we were able to close earlier this year, that has given us a very long runway and time horizon in which to plan and make our investments to really ensure that we are a transformative company that's around for the long term to really help communities across Africa get more for less.
I mean, Kenya was hoping to see you as the first unicorn in the country. Now you're moving to Zanzibar. What is so attractive about the investment regime in Zanzibar that is different from Kenya?
First, I'd say we remain very committed to our business in Kenya and have continued to see growth there, and we'll continue to invest there hopefully for years to come. We've always been, or for quite a while now, a multinational company. We did our first international expansion here, actually in Tanzania, over 4 years ago. And since then have expanded to 6 countries in total. So I think we are truly Pan-African in that sense presently. And so really, Zanzibar for us is about having a environment and having partnerships with the government as well, where we can make a truly global headquarters possible. And that means being able to bring in talent from across the continent, the best and the brightest software developers and product managers and data analysts, and even being able to bring them in from beyond Africa as well.
Thanks, Julius. Now let's come down to West Africa, and we'll start with Ghana, where the country is saying that there are no plans to reverse its decision to bar outgoing calls and data service for 2 days in a week of persons who have not re-registered their SIM cards. Now earlier, Courage Botti, an economist, spoke with CNBC Africa's David Alabi on the impact of this move by the government.
Well, yes, valid argument, but I believe the crux of the matter is to check fraud. and then to get people into the formal sector, really, to be able to monitor activities of people. To the extent that, yes, we've had some registrations in the past, but it's not exhaustive because the base data that is used for most people, there are, if you like, documents that are no longer valid, or per our laws now are no longer considered valid. And so there is the need to get everybody to get into the new database with what you call now the valid data, the Ghana card. Three different challenges here. One, I think the base document being used here, Ghana card, the assumption is that everybody should have it by now because the National Identification Authority went on a national campaign to register everybody. Some people genuinely have not gotten their cards back. Others have. And so there is a challenge with whether you have the card or not, and then to meet the deadline. Then there is also a second problem of this deadline being extended over a year now. I mean, we've run a year now with this SIM registration program, extended period after period. But the evidence suggests that, I mean, for every extension, you would see the rate of participation drop significantly unless a new deadline is approaching. And so it appears that the deadlines being extended are not really helping. And the issue may not be about the deadlines per se, it's about people willingness, one, and probably the base document. I guess the argument for the base document probably is the reason why there might be a need for continued extension. But the argument that counters that will be that people are not even readily thronging those registration booths or centers, even if you extend the deadline. The crust of the matter is that people are already in the system with SIM cards that need re-registration. And so once you get those of the way, then continuous registration can continue with new purchases. I guess that is what the whole issue is.
Okay, Karen, let's also talk about the area of sensitization here. Like you've mentioned, at July, the Ghana News Agency made mention of the fact that closer to the deadline, we saw over 200,000 people come over to re-register their cards, and then by August, it was just barely about 5,000. But with this 48 timeline where we see the subscribers blocked, to what extent do you think this is enough of a punitive measure to ensure that we have people register? SMSs will still go through, isn't it?
Well, yes. So it's not punitive enough to the extent it's not exhaustive, right? I mean, you can still do some services. Maybe you might not be doing calls, you might not be using the internet services, but you could still do a few other things with the same SIM card. So I guess it's kind of a compromise, really, to get people also, if you are restricted in a way, to get people to do what is right if you really need a SIM. But I guess people are also not registering for some motivations, really. For most people, this micro loan packages they have with the banks through their Momo account, for a lot of people who have negative balances on that and are not willing to pay, they have no intention of registering their cards at this moment. So I guess the interests are different and varied at this point. The NCA probably is also trying to ensure that those people do not go scot-free. That's why they keep giving some dispensation for people to regularize it. But I understand that what we've had now, I'm saying the kind of punitive measure now they put across, it's not exactly too punitive because people can still find ways around some of these things.
Courage Botide, an economist with GCB Capital. Now we shift our attention to the African Adaptation Summit in Rotterdam, where Managing Director of the International Monetary Fund, Kristalina Georgieva, says climate adaptation is critical for Africa's economies to grow. In a chat with CNBC Africa's Kenneth Igbomo, Georgieva says African leaders must continue to speak up.
It is very clear that adaptation is critical for the economies and most importantly for people. And Africa, that has done nothing to create the problem of climate change, is already suffering its severe consequences. All of us here have an obligation to be concrete in our commitments to Africa. We at the IMF have placed adaptation in Africa at the heart of how we think about supporting resilience in the continent and good development. And we are also placing behind this commitment a $40 billion strong resilience and sustainability trust. We already have started work with the first group of countries, and not surprisingly, already 3 of these are from Africa. Our objective is to bring this money not just on its own, but as a mobilizer of private finance with 3 big objectives in mind: resilient agriculture, so Africa can feed its people; resilient infrastructure, so when roads are built, they don't get washed away from the next floods; and resilience in how the nature of Africa works against the risk of climate change. In other words, how we can make forests and mangroves be a source of economic and social resilience.
All right, but when you look at how it's playing out, there's already a pool of finance already for climate change globally, and we need to structure it in such a way that Africa gets a little bit more of that cookie.
This is why a summit like this is so important, for leaders from Africa to speak up. Promises have been made, 100 billion a year for the developing world, and we are still seeing that promise not quite met. It has to be met. A promise is made to double funding for adaptation. This promise has to be met. I speak on behalf of my institution. Promises we make, we keep, and that has to be for everyone.
That was Kristalina Georgieva, the Managing Director of the International Monetary Fund. Now, this brings us to the end of Africa Business Weekly, and a big thanks to Tanya and Julius for the regional updates. I'm Akin Obakeye, and we'll be back same time next week for more weekly business stories across sub-Saharan Africa. Thanks for watching.